Hey childcare owners, you guys welcome. I want to welcome you guys to my channel. If you have not subscribed to our Childcare CFO YouTube channel, go ahead and click that like and subscribe button below. Today I'm going to talk about something that's very, very important, and it is something that I see year in, year out with childcare owners. And it's the 3 most common overlooked business tax deductions that childcare owners don't even know about, they never even take advantage of on their tax returns. For those of you guys who do not know me, my name is Donna and I am a childcare CFO. I assist childcare owners with ensuring that they increase in revenues from an annual basis and save on average $100K in taxes every single year. So let's get into these 3 most common overlooked business tax deductions for childcare owners. The first one is going to be retirement. Yes, retirement, guys, is a business tax deduction for you as a childcare owner. And the reason why this is so important is because most childcare owners don't even have an exit system set up in place, right? You guys are working day in, day out, not even thinking about, hey, one day I'm going to actually retire from this and I'm not going to want to do this forever. So what is my exit strategy? What is my exit plan? And not just only having an exit strategy or an exit plan, how can I benefit from implementing or starting to implement that exit plan on a yearly basis to where it saves me in taxes, right? Not only does it save me in taxes, that it puts me in a place to where I can retire in the next 5 years, 10 years. And on top of that, if we really want to get into things, what can I do with that money once I contribute it to a retirement? Can I set it into a growth asset to where it's just sitting there, but it's making money off of the base of the money that's just sitting there? Guys, contributing to your retirement as a childcare owner is one of the biggest tax strategies, tax deductions I see overlooked every single year when preparing tax returns for multiple hundreds of thousands of childcare owners, okay? So what do I really mean by that? Let's get into the nitty gritty. Let's just say that you're a childcare owner and every year you're owing $50,000, $60,000, $100,000 in taxes, and you're looking for ways to reduce your taxes and not even thinking about, of course, your tax preparer is not telling you, which is why I never see it whenever you guys come to us and we end up doing your tax returns and we don't see these things taken in prior years. And let's just say I need a way to save $60,000, $70,000 on my taxes because that's the amount that I tend to pay every single year, year after year. Well, again, the retirement is something that you can contribute to. There's so many different types of retirement plans. This video is not about let's discuss the ins and outs of different retirement plans. It's just letting you know as the childcare owner that they're out there for you to contribute to. That way you can reduce your taxable income, which reduces your taxable liability at the end of every year. So let's just talk about a SEP IRA. That's a type of retirement plan, or a simple IRA. Or let's just talk about, most of you guys are not gonna qualify for a solo 401k because you own centers and you have employees, etc. So let's just talk about the simple IRA, which is a retirement plan. And let's just say you contribute the maximum into a simple IRA of that being $72,000 for the year. Did you not know that $72,000 that you contributed to your business contributed to your retirement is a $72,000 write-off for the business? So not only does the business get a write-off and it reduces the business's taxable income, it also means that you are contributing to your retirement. $72,000 for the year. So it's a double whammy. The business gets a write-off to where they're saving in taxes, and then it's contributing to your retirement. And depending on what account that you have in this particular retirement, if you're investing in different stocks, etc. Like I said, that's another video for an entirely different day. You know, that money that's just sitting there in your retirement can be growing and you can be making more money off the money that's sitting there. So by the time you get ready to retire, you have hundreds of thousands of dollars in retirement funds that you can retire comfortably on. Okay. And many childcare owners are not aware of this. They don't know this. Like I said, I see it year in, year out where this huge tax deduction is missed. Okay, so let's talk about the second most overlooked business tax deduction that I see For childcare owners, it's going to be payroll. Many childcare owners have families where they have children and they don't have their children on the payroll. Not understanding that if you put your child on a payroll, it's a deduction for the business. Depending on what year you're in, that deduction changes year in every single year. But let's just say for my example purposes, the deduction is $16,100 and you have 2 children. Did you not know that you can hire your children in your childcare center? You know, if their ages 6 through 17, you can hire them, give them a role, give them a responsible job to do in accordance to what their age range is, and you can pay them up to that maximum amount of whatever, you know, you can pay your child for that year, and it's a tax write-off for the business. So in this example, let's just say the deduction is $16,100 per child. You have 2 children. That's what, $33,000 something odd dollars that you can write off, the business can write off and reduce the business's taxable income. So when you reduce the business taxable income, guess what? You reduce the business's taxable liability, okay? Simply by hiring your children and putting them to work. And guess what? That money that you pay your children, it's not taxable to your children. So it's a write-off for the business. It's non-taxable to your children. And what you decide to do with that money that you're paying your children, whether you decide to put it into a custodial Roth IRA for your children or a high-yield savings account for your children, again, those are strategies for another day, another time. But you can make your children millionaires on, you know, just doing this particular strategy year after year. So everybody gets a benefit. You as the business owner get a write-off, the business gets a write-off, children, they get paid tax-free, and you're setting up your children to be in a very, very wealthy position to where before you look around, it's time for them to go to college. They've saved up enough money by, you know, doing this particular strategy where they can pay, you can pay for college out of pocket, things like that. So it's very important that we don't overlook these particular tax strategies, okay? So if you have not hired your children, now is a good time to hire your children. The last biggest tax deduction that I see overlooked by childcare owners is going to be the Augusta rule. The Augusta rule is where you as the business owner, you're able to rent out your home to your business, to your corporation, and receive income for that particular purpose, and it's a write-off for the business and it's tax-free to you. So for example, let's just say you hold corporate meetings at your home, you have corporate Christmas parties or anything of that nature, and you're using your home to rent out to your corporation that you own. The business gets to take a write-off for it, and you get to receive that money, and it's tax-free to you, right? So this is it's a beautiful tax strategy that is often overlooked. And what do I mean by? Of course, you definitely need to keep your documentation for everything. If you're renting out your home to your business, there needs to be a documentation as to why you're doing so. There needs to be, okay, how much are you renting out your home for to the business, because it has to make sense in the case that you're audited. So therefore you may have to do a little bit of research to see what are rental spaces running for in your area to get a good feel on how much you would rent your house out for corporate reasons to your business, to make sure that the amount that you're charging your business is fair and justifiable. That's very important, making sure that you keep all that paperwork to document this particular tax strategy. And this particular tax strategy can save you hundreds of thousands of dollars in taxes. I see it year in, year out, but I also, again, I see it overlooked by childcare owners. So it's called the Augusta rule. So you definitely want to make sure that your tax preparer, your tax accountant, whomever's doing your taxes on an annual basis are taking account for these particular tax deductions, okay? So don't forget, you want to make sure that you have the Augusta rule implemented within your business to save on taxes. You want to make sure that you're hiring your children to save on taxes, and you want to make sure that you're contributing to whatever retirement plan suits you so that the business can get a write-off for that, and you're saving on your taxes as well as it's benefiting you from a personal standpoint, okay? All these tax strategies, they're benefiting you from a business standpoint, and they're also benefiting you from a personal tax point. So it's very important that you don't overlook them or let your professional overlook them. And this is what's causing you to owe more than your fair share in taxes, every single year. There is a way to reduce your tax liability. So I hope this was informative. There are going to be many more videos to come about how you can save in taxes. So if you're a childcare owner and you're experiencing having these high tax liabilities every year, these tax bills, and you just know something isn't right, and you just know that there are some tax deductions that you're missing out on, there is a link in the description of this YouTube video. Click the link and book your free childcare strategy session so we can assess your situation and figure out what tax strategies are being overlooked for your particular childcare.